If you're looking at the AVR, for example, the Alpha Volatility Radar, you'll see that on the daily time frame, the price is set to go up on the short length, up on the medium length, and down on the long length. What does that mean? Well, if you don't know how to trade volatility and you don't know how to read different time frames, well, you should come and learn how to trade volatility at Alpha Trading. So just go to alphatradinghq.com/discord. Once again, that's alphatradinghq.com/discord, and you'll see that you can enter our Discord for free, go to the request support channel and get the free volatility starter pack of indicators, which includes the AVP, which is the Alpha Volatility Percentage, and the ATPC, the Alpha Trading Pearson Correlation, as well as the Alpha Laser Returns, or ALR. And you'll also have the AVQ, which is actually freely available on our TradingView channel, on the Alpha TradingView channel. In any case, so you can come and learn all that for free. Free educational information, free tutorial videos, free whatever you want. Free access to the chats, free access to discuss with other real-time, traders in real time in Discord, and of course in the live streams, which are Monday through Friday, and they start at 9 a.m. Eastern time. So yeah, today is Thursday, the 13th of June, 2024, and that's what the Alpha Trading AVR indicator indicates. It's saying on the daily time frame, up, up, and down for the different lengths of the AVR that I typically show in the Discord. Now, of course, the different time frames will have different reads, and the lower the time frame, the more occurrences of opportunity there are, right? So you can make more trades going to lower time frames and snagging faster scalps, because that is exactly where the action happens. It starts on low time frames, right? Because the market is 24/7. It doesn't stop, so it's always running. Therefore, that's why you can find more occurrences of opportunity in an inefficient market, where you can exploit the inefficiencies of said inefficient market, which is a random market most of the time. It's not as trending, because the only two states of the market, random walk or trending moves. And you can see whether or not the asset is in a random walk or a trending move using our entropy indicators. So anyway, that is the long and short, so to speak, of the price prediction for today. It's set to go up, up, and down across the different lengths that I use on the AVR on the daily time frame. Now, of course, like I said, lower time frames will have different reads. Higher time frames will have different reads, and you can certainly find plenty of scalping opportunities throughout the day. Now, how does this have any bearing whatsoever on broader economics? Well, it doesn't. Right? Scalping doesn't have an effect, if you will, on broader economics. Your low time frame scalps are not affected necessarily by what's in the news, right? Broader economics suggest that the overall market will continue to move towards the upside in the long term. But the long term is obviously not what you trade when you're a low time frame scalper, right? Because things that happen a month, 3 months, a year, 5 years, 10 years from now has no bearing whatsoever on what you're trading today. What matters on what you're trading today is the low time frame volatility, entropy, probability, and statistics, which we have coined the term VEPS, right? VEPS, VEPS, and that's an Alpha Trading term that we use just to make it easier to know what we're talking about. So to say it quicker, I should say. Anyway, but I did want to point out a few things about broader economics, right? So as we discussed earlier this week, and as I mentioned last week, there are, of course, a number of things happening that are affecting macroeconomics. For example, the death of the petrodollar, right? And now that the petrodollar deal has collapsed, is not being renewed by Saudi Arabia, we are seeing that, in fact, it is going to have massive global repercussions on the US dollar. Will these things all happen overnight? Well, they haven't happened overnight yet, but that doesn't mean that they won't eventually, right? So it's like a death by 1,000 cuts, and then when it happens, it happens. So it'll feel relatively painless as the days go by. It'll keep just getting worse and worse and worse. It's a bearable amount, a little bit every day, until one day it's not bearable anymore, and the whole thing collapses overnight. But it may take years. It even may take decades, and even after the dollar itself, quote unquote, collapses, as other fiats will as well. There will certainly be surrogates or replacements to it, because there will always be some people, especially in governments, who want to maintain some kind of currency to represent the money that their government issues, because they believe that gives them a certain amount of power, which obviously at the moment it does, since it allows them to pay for things like their armies, like their big nuclear bombs or their tanks or their guns or whatever they pay for with their tax monies, right? It does other things too. It controls the population. When you have an asset that is issued by fiat and it is subject to inflation and interest rates, then people's salaries and standard of living and quality of life are all impacted by how many of these numbers they are issued, whether on paper or in coins or electronically, right? It affects how people are living, based on how much they're able to earn. And of course, it affects the markets, because, for example, if you trade Bitcoin, what do you trade it against? Most people tend to trade it against dollars, right? Yeah, you could trade it against Ethereum or Litecoin or Solana or whatever you want, or gold or oil or anything. But most people trade their assets on their markets against their local fiats, whether you're trading against dollars, as many people across markets around the world do, or virtual dollars like Tether, or stable coins, USDC stable coins, or DAI stable coins, or whatever, or whether you're trading against euros or yen or shekels or pounds or other dollars, Australian dollars, Canadian dollars, whatever. So these things all make a difference, right, in terms of having a relatively stable pair, even if it's dying slowly over the course of decades or centuries. It gives people the appearance that they have something stable to trade against, and for practicality purposes, trading against stable fiat, or relatively stable fiat, does actually provide something that's easy for people to conceive of when they're trading. But what does it mean? What happens when these fiats actually do die and get replaced by another form of fiat or something else entirely? Well, it will obviously drastically affect things like trading, and it will affect things like how you live and what you spend your money on and how you're able to spend your money, right? Whether or not you're able to cover your bills, etc. So these are all things to remember and to consider when you're trading, and geoeconomics is an important thing to keep in mind in the big picture. Although it obviously doesn't affect your day-to-day trading on the day, you need to be aware of it so that you're not holding a big bag of currency you eventually won't want because it will be useless. Anyway, that's it for now. Happy trading.
Hello.